Hi everyone, this is a recap on the SPX trade back in November. It's always important to look back at the trade and see what developed and how you could have used the information at that time to make better decisions in the future. So right here on the SPX, let me just get rid of all this stuff. You can see that on Wednesday, right into the close, there was a little bit of a rally and actually a Wolfe wave developed on the 5-minute time frame, which probably generated around, depending on your entry into the close, it generated probably around 30 to 80% profit. Okay, and then knowing the schedule of the week, like every Thursday and Friday, there's going to be an economic report. Those economic reports are going to affect the market significantly. So in this Wolfe wave, you can see that the profit target of 3,970 with respect to the entry here was just a 0.32% move, which is not really that much. Okay, I mean, I think if you get into an SPX 0DT on that, you're gonna probably be able to pull out maybe 30 to 80%, possibly 100. Okay, but this is not, that Wolfe rate right there is not a setup that's going to produce a 10x to 100x to 500x reward. Okay, that's not going to happen. It's going to produce something, and but it's not. You can't. Your expectations of 10x is just not there. You just clearly measure the move, the entry alert to the target, and it's just not there. Okay, so if you like to scalp, then maybe that's a trade that you could take. But if you want something more asymmetric, meaning risking 1 to make 100 to 10, that's not it. Okay, so let's see what happens when we move into. So yeah, you can actually see all these gaps, and you got this consolidating price action into Wednesday. And if you're an experienced trader, you know Wednesdays are pretty much very dull days, right? Unless there's some economic news or presidential speech that's happening. But most of the time, Wednesdays are just like any 9-to-5 job, just trying to get the day over with. And let's play that. So it's just consolidating, and then you get a Wolfe wave into the close. So it met its objective, and then the economic report flushes the market, gapping it down almost 2%. And here you can see that the risk and reward is becoming more attractive. A 1.53% move is really attractive for SPX, especially for 0 DTE. Okay, now so in terms of the market internal, I think the market internals was showing, let me just quickly check on November. I don't know if I can check because that was a while ago. So the November 17th, the trend November 17th, the trend was 0.8. Okay, so that signaled power hour rally, and you get your first, so in the first 30 minutes, so 5, 10, 15, 20, 25, 30, it made a lower low. So I guess in hindsight, if the market gaps down on news, okay, and the market is generally resilient to this type of information, but because there's just, in this certain market conditions, we have interest rate talks that are always overclouding the market sentiment. It takes about 30 minutes for the news to digest, and as we move forward, that's when a reversal candle formed, and then it started to consolidate, right? So after the consolidation, you can analyze the low from after 30 minutes of the opening bell to where it started to form a TTM squeeze. I don't know what this is showing, but it made a higher low. So based on Elliott wave analysis, not Wolfe wave, you can see that I had that image of the chart. It's showing wave 1, and then that's 2. So once you know this pattern, then you can, obviously after 2, you get 3, right? So 3 would have to be moving higher. So we don't know exactly how high 3 can go, but we can use the Fibonacci extension from wave 1 and then project it such that if price from the pivot of wave 2 moves through wave 1, then we have a price target of 3,962. Okay, so the waves here are not representative of the time, right? So we got wave 3 that met its objective, met about 80% of the objective, not quite there, and it pulled back into the close, forming wave 4, and then wave 5 came in on the another economic event, that a report. So you can see that with Elliott waves, you have to constantly keep on changing the wave structure, but the theory of Elliott wave is valid. Like if you get a wave 1 and you get a pullback that makes a higher low, that's a very good bullish sign. So a higher low off of a wave 1 indicates a wave 3, and then wave 3 will, when it develops with the trend of 0.8, will produce a power hour rally, which happened actually much sooner than the last hour. Actually, the last hour of the day, because of the other economic event report, it pulled the market back. So that was a pretty good trade for wave 3 if you're able to identify wave 1, 2, 3. And not being greedy on taking there was actually a moving average at 3,967, because I think everybody wanted to see that gap here at SPX fill, but it didn't, right? So you gotta be very careful with how stubborn you are to wanting to close that position right here. I would say 90% of the time, almost like 100% of the time, those price objectives that you model using fib extensions, they won't meet, they won't achieve that target. Okay, so you're long-term wise, you're better just to manage it when you're 80 to 90% close to it, and then see if you can catch any reversal patterns. I think you could probably have seen that reversal come in on the volume. So the volume on wave 1, you get the volume coming in, and then you get that pullback, which is forming wave 2. Wave 2 is higher than the bottom of wave 1, so then you get that wave 3 push, and it kept on pushing and pushing and pushing all the way up to the Bollinger Band two times. So that would be on the double top that was exhibited here, and that would be the clue that you need to get out. Okay, so you can just try to pick up clues. Like the first attempt when it pushed through the Bollinger Band in the upper level there, that was the breakout. Then you've got that bull flag that formed, which pushed it up again to the Bollinger Band, and that is like a double top for a Bollinger Band, if we're looking at Bollinger Band technically. So that would be the level where you want to manage. And then going into the next economic event, that's a little tough, but you can see that as it pulled back, there's still asymmetric risks that would not be that bad. It's still a 1.55% into a binary event, and that exploded the price higher on Friday morning at 8:30 a.m. Eastern Time, and then profit taking started coming because it left a gap open. Okay, so yeah, this SPX with the Wolfe wave has been working fantastically. We have a new system for SPX which we are using starting January 10th. You can sign up for the upcoming 10K challenge that is on January 10th. Before January 10th, I'm just making sure everyone gets prepared with the the ledger, the digital cloud ledger, and then also connecting all their SMS and emails to making sure that they get the alerts. We got 14 days left, but with the new system that we have, that I'll be teaching, also recapping with videos, we have already been testing the system, and a lot of our traders have been making bank on this new system, which we'll be using for this next 10K challenge. The 10K challenge is very, very simple. It's asymmetric in nature, meaning that you're only risking 400 to make 10,000, which is amazing, right? Each trade is approximately $100, and we should be able to reach that goal of 10,000, with net balance being 10,000, within 2 to 17 trades. So yeah, sometimes you can get these crazy Wolfe waves where it shows you like a 2 to 3% move, and one contract can go from like 100 to like 4,000, and you're like already halfway done on the second trade, right? It's the first trade. So we're looking for those types of systems, setups where we can take that type of risk and make it a little easier, because every time you lose, it's not going to be as damaging as going in full port. Like full port would be like 400, and once you put that in there, I mean, $400 is, relatively speaking, depending on how big your account is, not that much. But if you start with your full port being 400, then you go full port on the first trade, you're out, right? You want to have at least 4 shots at those asymmetric trades, long puts or long calls, it doesn't matter. Whatever the Wolfe wave gives us, we're taking them. And then you should be able to hit, at least, if you're very careful with how you're measuring the volatility and the market internals, which will be all recorded, you can get these nice setups like on the next day, on those binary events, or into the on any gaps that are created at the open. Okay, so you can sign up. This is our previous 10K challenge using FANG stocks. FANG stocks are a little bit tough because there's so much news that's being interpreted and being released by each company. Each company has their own news cycle. We were able to, about 57% of the traders who participated in the challenge were successful. However, it was a little bit complicated because there's so many companies to trade. Now we simplified the 10K challenge using just SPX and Wolfe wave, so that's amazing. And then on top of that, this previous 10K challenge started off with 1,000. So we're not starting off with 1,000, we're starting off even lower, which makes the asymmetry a lot more attractive, right? Because you're not risking so much and you're making a lot. If you register before January 10th, you'll get a 50% discount. Anybody who joins after that, you'll just have to pay the full price. All right, hope to see you there. Thank you very much and have a great day.